What are we going to talk about? Well, just to set the scene, the US is in an economic funk right now, and I feel when I talk to my colleagues on the East Coast and people in New York and Washington, I'm getting a greater degree of attention than I have for a while. I don't know how the rest of you find it living out on this coast, but from time to time it seems that they think that we're all spoiled by too much sun and too many stock options, and they treat us like indulgent parents. And then a time like this comes along where growth is in very short supply, and I think everyone's looking for where the engine is going to come from to push the US forward. And the innovation coming out of the Valley and out of the tech industry at large is something now that has got the world's attention, and not just the East Coast attention, the world's attention. And I feel that throughout the FT network. And it is an amazing time to be here again. And underpinning this is a financial system, a financing method that, again, is the envy of the world. The way that startups here are financed, developed, the expansion capital is something that the rest of the world has envied for a long, long time, and it's a key part of what drives this innovation engine. And a key part of the US competitive advantage. But now it feels like, for various cyclical and structural reasons, we're at a bit of a turning point. And I think that's what we're here to explore today, what the opportunities are, where the innovation is. There's a lot of innovation going on in the finance sector itself, and what the risks are. And you just have to sort of look at some of the big structural challenges. The venture capital industry was ticking along quite nicely, raising $30 billion a year in the US through 2007, and that's sort of fallen off a cliff. It's the last couple of years, it's been half that level. The third quarter was the lowest for 8 years, and so this is now an industry that is finally contracting. A lot of us thought after the last bubble, why isn't VC contracting? Why is the overcapacity staying in that market? And finally, I think we're seeing it for structural reasons to do with the investors in venture capital needing to pull back. But that is a big, big change. And when you think that in China, where venture capital investment is soaring, it's now up to, I don't know, $7–8 billion a year. And you look at the fundraising in the US running at $15 billion a year, it's not so far off. And it wasn't long ago, I remember 4 or 5 years ago talking to some of the big venture capital firms here, and I was told, we don't need to play in China. This is our backyard, and everybody comes to us. And that's changed remarkably quickly, and we're just in the middle of that transition. So, we don't quite know where that's going to go yet. And then obviously the exit markets are incredibly challenging. This was the year, in fact, it seems that every year at about this time in December, we all write stories in the papers and online about how next year is the year the IPO is coming back. I remember writing them 2 years ago and 3 years ago, and then we all come up with our lists of favorite companies that are going to IPO, and I'm sure Workday has been on there at least 2 or 3 times. But this year really was the year the IPO came back, and then it sort of fizzled. We've had a couple of very high-profile deals. Valuations have gone a little flat again, and who'd have thought that here we are right at the end of the year, and Zynga is looking at a $7 billion valuation, which is barely half of what we were all talking about 6 months ago, 9 months ago. So the IPO and the exit market generally is still challenging. Against that, there has been a lot of innovation from the very early stages, the super angels, the new sort of early stage funds, right through to the private secondary markets that have really, I think, stoked up valuations a lot, and actually introduced some interesting dynamics into the valuation financing of late stage companies, which I think we're going to explore today. So with that, we've got a great program of people from both sides of the table, both financiers and entrepreneurs. We're going to be bookended by two of the hottest startups around that haven't IPO'd yet. At the end of the day, we got Drew Houston along from Dropbox. I'm sure you're all Dropbox users, I am. But first up, I think from one of the hottest enterprise software companies. I know those words don't often go together, hot and enterprise software, but you only have to look at what SAP paid for SuccessFactors at the weekend. You know, $3.5 billion, a 50% premium, very high valuation, to realize that, you know, something tremendous is happening. And you know, one of the reports I read from an analyst on Wall Street yesterday said, you know, the reason SAP did that deal was because of Workday, because Workday is starting to eat into, you know, their lunch, which is their annuity maintenance revenues that they thought they could sit on for a long time. And you know, Workday is starting to have an impact. So first up, very glad to welcome Aneel Bhusri. Aneel. Welcome. So Aneel, you've been on, well, you are on both sides of the fence. You've been on both sides of the fence as a CEO, co-CEO, co-founder of Workday, and a partner at Greylock. Are you currently investing?
Not really. I'm mostly running. I moonlight in the venture world.
All right. Well, let's start on Workday and do our due diligence here. So you recently raised 85 million in your latest round.
That's
You've
correct.
raised nearly 200 million now.
250.
250. And I think we and others have reported that you've now got a $2 billion valuation.
What was reported was roughly accurate.
All right, so that was roughly accurate. Well, we like to think we're exactly accurate in the Financial Times, but okay, let's accept that, roughly accurate. Well, and in terms of revenues, where have you got to in revenue now?
This year will be about 300 million in total bookings. Last year, 150 million in total bookings. We haven't started disclosing revenues, but we will shortly as we head into next year.
So, let's just get your microphone up. The floppy jump is not serving you there. There we are. You have to hold exactly still.
I should have
now.
dressed up. So revenue is tracking bookings growth, but in our business, revenue is a trailing indicator. Bookings is the way we run the company, and it's the number we've shared until we're forced to share more when we go public.
All right. So next year, you'll still be running at the same, growing at the same sort of rate, do you think, doubling?
I think so, and I think the thing that changes next year is the financial products really come online. So far we've been really selling human capital management, payroll, and talent. And we've been selling the financial products in more of a controlled release manner. And next year we take off the governor and we start selling.
So you've gone from human resources to you're trying to do the full suite.
Full ERP suite.
And finance is right at the core of what companies do, right?
Exactly.
So that's the tough one to crack.
That's the tough one to crack.
Have you got any big accounts yet?
We've got 50 customers using our financial accounts. Big ones like Sallie Mae and Georgetown and Brown University are some of the early ones. And we should have some new ones to announce by the end of this year.
So you're not going for small and medium-sized companies, all those things we hear about in cloud. You're going for the big guys. Yeah. You're going. So you want to be SAP of the cloud.
Yeah, that would be a good way to describe it.
Cloud,
yeah. From day one, we set out to do two different things when we started Workday. One was to go after large enterprises. And at the time when we started the company in 2005, it was viewed that cloud is an SMB solution, not large enterprises. We thought that with what Mark Benioff was doing at Salesforce, that it would move up market. And then the second piece was very different than a SuccessFactors or a Taleo. We weren't a point solution vendor. We wanted to replace SAP and Oracle rather than coexist with them. Right. And so as a result, we end up here 6 years later as in a pretty unique spot. We really don't have a direct competitor in the cloud.
Right. Now you've done this before. You and Dave Duffield, your co-CEO and co-founder,
yeah.
Through PeopleSoft had been this route before. What is different this time around? What's different about building and financing a company like this in the cloud versus the old ERP model?
Well, first of all, I think there's many things that are different. The most important piece is that it's much better for the customers. Every customer is on the same version. Every customer gets new innovation.
No, we don't need the marketing speak.
No, but this is not just Workday. No. This is why the cloud is having the impact it's having. So you're on the most modern version, so you're getting all the new functionality, and the most important piece is the vendor takes care of the upgrade. That's where the old model really broke down.
But what about for you and building a company?
So PeopleSoft, we were constantly playing catch up to SAP. They were the leader in the market, and much of our strategy was defined around trying to catch up with them. This time around, we're really focused in on the solutions and areas we know we're good at. We know we're good at HR, we know we're good at accounting, focused on service companies. And you know, the difference this time around, really from a capital perspective, you don't get paid up front by your customers. So you incur all the expenses up front, but you get paid over time. So it just requires a much bigger investment to get the company to a break-even point. And that's probably one of the biggest differences in terms of
There's been a real question about whether Wall Street really gets these companies, and it's been going on a long time. You only have to look at Salesforce's valuation right now to sort of think that Wall Street's got over that problem now and has decided, yes, we get it, this is a real business. Is that right?
I think they finally
got it.
Yeah. And at the end of the day, it's just the vagaries of accounting. In the license business, you sell a perpetual license that the customer has forever, and you get to recognize all the revenue immediately. In our business, we'll sell a 3 or 4 year deal, which means we get to go back 3 or 4 years later, but we only get to recognize the first year of revenue. So if you normalize those, the multiples actually are more tied to growth rates than they are revenue multiples.
No. So we look at valuations now and where things have got to, both for you and for the cloud generally. So success factors is an interesting sort of point along the way to check off. 8 times next year's revenues, and this is a company that isn't growing anything like as fast as yours, right? It's growing at 20%, 25%, whatever. So what did that make you think when you saw that?
SAP was desperate. I mean, I really think that's at the core of it. There's only a few cloud properties, because I think for the better part of the last 10 years, SAP and Oracle together tried to convince people the cloud was not going to go into the large enterprise. So a few surfaced, and for those that surfaced, they're unique properties, and I think SAP felt like they had to have a play in the cloud.
So they overpaid?
They had to pay.
They had to pay.
And they had to pay.
Did it make you think that you did your most recent financing at too low a valuation? I mean, if they're at 3.5, you're going to be up there at
we're in this to build a company for the long run, and we financed it in a way to build it for the long run. This last round was Fidelity, it was Janus, it was Jeff Bezos, it was T. Rowe Price, people that are long only and focused on being part of a company for the long run. So whether it was the right valuation, plus or minus, that doesn't matter. I'm excited we have investors that are really going to bet with us and be with us for the next 5 to 10 years.
Yeah. People have talked for a long time about what happens when cloud companies, SaaS companies like yours grow up, how the Oracles, the SAPs of this world respond. And obviously we've all been predicting acquisitions, and it seems to be happening. So Oracle bought Right Now, Success Factors is coming along. So are we just on the brink of the big guys buying out the newcomers?
Not Workday. I can say that with certainty. We were not. Selling PeopleSoft was not really what we wanted to do. For those of you that remember that, the Oracle.
I don't think anyone's forgotten that.
Yeah. We're building a company to be an independent, self-standing company, and I look at what Salesforce has done and said there's a clear path to building a $15, $20 billion company in this space, and we would like to do the same thing. I think with the success factors, the Concurs, some of the other point solution companies, they are exactly that, they're point solutions, and so they're natural acquisition targets. We're trying to be that full-on core system of record for HR and accounting, and so we have a $50 billion market, and it's ours to screw up.
How are you going to ensure that you stay independent? I mean, let's first steps first. Presumably an IPO is in your future very soon. When are we going to see that?
Yeah, I'm not at this point. I'm not supposed to talk about it anymore.
So that means soon.
I did an interview on Bloomberg several months ago, and that's probably the most recent statement, and nothing has changed since then.
And I seem to recall you were saying earlier in the year that 2012 was really the year for you. And that's really because as an enterprise software company, you've got to be out there as a public company to reassure your customers, right? They need to know, they want to be able to kick the tires and see the finances and know you're here to stay.
Yep. So it's twofold why we haven't gone public yet. Number one is you can really do a lot of great innovation while you're private if you don't need to be public. But to your point, we need to be public at some point. But the second piece is we really want to see the traction of the financial products. Going public for an enterprise company, IPO is a big branding event. For a consumer company, they already have big brands. So for us, we'd much rather be viewed as an ERP replacement than just an HR company. And I would hope by the time we're public that we will have that first slate of really big financial customers, and then that's a very different story you can tell.
So once you're a public company, what is to stop Larry Ellison coming around and knocking on the door and saying, you know, Dave, Aneel, let's do it again?
Yeah, he can knock on the door, but it'll be locked.
How are you going to lock the door?
Between Dave and I, we'll control well more than 50% of the company.
Is that through a dual class structure or just outright stock ownership?
You know, without commenting on dual class, I don't know where we'll end up on that, but outright, it's already well over 50%.
And so you're not planning to dilute the two of you below that? You're going to hold it. But long term, what are you long term? What does Workday become long term?
You know, I think long term it becomes hopefully what you said up front, the SAP of the cloud. There's an opportunity for one vendor to emerge to take that ERP platform and move it into the cloud. And right now we have a 5-year head start on SAP, Oracle, everybody else. And so it really is incumbent on us to continue to build great products and continue to take care of our customers and just stay ahead of the competition that way.
Yeah. Well, let's switch to your role as an investor. I know you're not as an active an investor now, but obviously you have been a very active investor and you've looked broadly across the cloud and the cloud opportunity. So, you know, normally when you get a technology transition like this, it throws up giant new companies.
Yep.
And you can't always see which ones are going to, you know, come out the other end, but there will be a handful that make it. When you look at enterprise software, you wonder how many of them will get taken out and whether the existing powers are going to rule. I mean, how do you look at the landscape in general?
You know, I think it's at such a micro level. It really comes down to the individual CEO and entrepreneurs, whether they want to build a company for the long run or whether they want to sell early. There's going to be a lot of great exits for cloud companies. But then you're going to have the Mark Benioffs of the world that decide, I want to build a company for the long run, or if we're fortunate enough to continue that traction, we're focused on building a company for the long run. I think what's interesting about the shift to the cloud is that some of the best cloud vendors are actually consumer internet companies like Google and Amazon. And I think it's going to be interesting to see how they look at the enterprise cloud down the road. So
are we just going to get 2 cloud enterprise companies, do you think? You and Salesforce? Do you think any others are going to make it?
I think ServiceNow is a very exciting company on the IT automation side. Mm-hmm. I think you're going to see this next wave of cloud companies come into areas like billing and industry-specific applications like manufacturing. We haven't seen those yet, so I'd expect a lot more will be going public and being independent than just a few. But if you fast forward to 10 to 15 years, we'll probably see yet another consolidation cycle like we saw with SAP and Oracle this time around. And I hope that next time around, Workday is one of the consolidators.
But you think that's still 10 or 15 years out? Because logically, you know, it's starting to happen now, yeah. And Oracle and SAP are not going to sit on their hands.
I think you're going to see a lot of acquisitions, but we still haven't seen many of the core systems. At the end of the day, HR and accounting and sales, those are administrative systems that are not mission critical. Your trading apps are mission critical for a Wall Street firm. Your patient care system is critical for healthcare. Your merchandise management application is critical for retail. Those are the really critical apps. Those yet haven't even moved into the cloud. So I still think we're in the early days of this platform shift.
I looked on Greylock's website at your own investing track record, and it listed 10 investments that you've been involved in. Every one of them has resulted in an M&A. I think maybe 1 or 2 were IPOs first and then M&A, but not one of those is an independent company now. It's often said in the Valley, you know, that the real growth and the long-term value gets created by independent companies, yep. As much as you're trying to create. Yep. So why so much M&A?
I think there's a couple reasons. One, for good or for bad, many companies that are started in the Valley are started to be a niche product or a feature, and it's hard for them to stay independent, and so they ultimately fit better into someone's product portfolio. every decade you get a handful of companies where they really have the chance to be independent. And Workday for me has been that way. I think Data Domain, company I was involved with, had that opportunity, but the management team decided that they wanted to become part of EMC. Yeah. So it comes down to the individual management teams. I do think that the biggest wins are when you're willing to take the large incumbents head on rather than trying to poke at them at the corners. So if you look at an SAP, are they vulnerable on the edges? Yeah, but they're really vulnerable at the core. And if you go after the core, that's when you can build great companies. And that is not the mindset of most enterprise entrepreneurs. That is the mindset of the consumer internet entrepreneurs. I think there's a lot for the enterprise to learn from the consumer internet.
That's interesting. So you talked about Google and some of these people looking at the enterprise now. Google's been at this for a while and not got very far.
I think they're getting pretty far. I mean, it's a $1 billion run rate business, and I think they're beginning to understand the sales and marketing aspects of selling to the enterprise. I think that was a big piece of the challenges around Gmail and Google Apps. They've now hired some very good Oracle and SAP people who are building out an enterprise class sales organization. So I think Google gets it. They're really focused right now as a company. I mean, I've seen that they're a company that we're probably pretty far down the path of partnering with to integrate our applications with Gmail, and they get the enterprise much more so than a couple of years ago.
So looking out across all the competitors you potentially have, who are the ones that you see as your biggest competitors? Is it going to remain the Oracles and SAPs, or is it going to come from cloud players who are trying to expand into your?
It's a question that we ask ourselves on a regular basis. The cloud players get the architectures, but HR and accounting are very deep, somewhat arcane domains. So do they want to launch themselves into HR and accounting domains? I haven't seen that. On the flip side, the legacy vendors understand the domains, but moving to the cloud is not easy. And I was a legacy guy. I went through that process. You just have to really just do brain surgery on yourself and forget everything that you knew about legacy systems and start with a clean sheet of paper. And I think that's really hard, not just at a technology level, it's also hard at a business level. Selling recurring revenue business versus big elephant deal license business, that's a hard cultural shift to make. So I suspect it will be Oracle and SAP, but I suspect they have a lot of work in front of them. I would say I'm more bullish that Oracle will figure it out than SAP will figure it out. I think Oracle's a very savvy company. I don't necessarily agree with their style of running a business, but I have a lot of respect for what they've done.
But Larry Ellison told us for a long time that the cloud was nonsense. That
he's changed his mind.
Was it rhetoric before? Was it just a bluff when he told us it was nonsense before?
I actually think that there's quite a few of the legacy people that thought the cloud was nonsense, and because they weren't seeing it really impact their business. And until you've been through 4 or 5 releases, like I've been through running the products at Workday, you don't really understand the power of it. The people that understand the power of it are all the consumer internet companies that are working on one line of code rather than multiple lines of code. I think they're getting clued in because the pace of innovation of the cloud companies is far greater than what's happening on the legacy side. And my prediction is that Oracle will buy NetSuite in the next 12 months. I've been predicting for the last year that Oracle would buy right now in NetSuite, and they bought the first one, and so I suspect that they'll buy the second one within the next 12 months.
And Larry, does he have a controlling interest in NetSuite still?
So it should be a pretty easy acquisition.
Be an easy deal to do. Arm's length valuation, but that's about it.
I'm sure they'll do it the right way, but I think that NetSuite is, we don't consider them a competitor because they're more focused on SMB, but my guess is if they were in the hands of Oracle would move them into large enterprises.
Yeah. All right, now we'll open this up for questions in a moment. There should be a couple of microphones both at the back there, so if you do have a question, put your hands up and get the microphone, and please introduce yourselves as well. Let's start with one over there.
My name is Victor Abraham. I was giving a lecture to about 25 senior management from China, and they asked me who are the top Fortune 100 companies getting involved in cloud. And I Googled, there was only 1%, and the name wasn't mentioned. If you could advise on the progress on the Fortune 500 companies going on cloud in the near future, so I can answer the questions next time.
So if I were to say Fortune 100, candidly, not that many. I think there's some good Salesforce customers. We get to Fortune 500 a lot. I think at this point we probably have 30, 40 Fortune 500 companies like Kimberly-Clark, Thomson Reuters, Time Warner, Tyco, Toys R Us. I'm not sure I'm allowed to mention all these, but I'm going to keep going. AIG, and our big shop is Flextronics with 200,000 employees. So those are just off the top of my head. And these are not point solutions. These are full system replacements that Workday has undertaken with these customers.
But there's still a big psychological barrier to many companies, right? Particularly that Fortune 100 to making this step.
You know, I got a chance just a few weeks ago to present to this secretive group of CIOs, the CIO Strategy Exchange. It's the CIOs of the 25 largest companies in the world. And to put it in context, as I was walking in, John Chambers was walking out, which got me very stressed because he's a very good speaker. I did a similar one 2 months later, and I was coming in after the CEO of RIM, and that was a lot easier since he was explaining his outage. The conversation of these 25 CIOs, and these are truly the CIOs. The only way you were in this meeting is you have to be the CIO of the 25 largest companies. It was not about security. It was not about whether the cloud is real. It's all about when do you do it, how do you do it, which partners do we work with. I was totally blown away by the mindset shift that's happening, and we're in conversations right now with probably half a dozen Fortune 25 companies. So I think it is happening, but it's happening there later than everywhere else.
Any other questions? Do I see any hands? There's one over here.
I had a question, John Globe. You talked about some of the changes happening, and I read recently about the win in Europe with Rentokel, I think 66,000 users worldwide. Traditionally in Europe, it's been very challenging from a policy point of view with regards to customer information, employee information. Have you seen some changes there around businesses embracing the cloud, specifically in the EU?
Well, so we've actually opened up 2 data centers in the EU to address that issue. They're very sensitive about hosting information outside the borders of the EU, so we've had to build out 2 data centers, the main one and then the backup data center. While the European market has never been at the cutting edge of technology, it tends to be a few years behind the US. They're under such immense cost pressures right now, and the cloud is a way for them to save money that is probably moving faster than it would have in a normal environment.
All right, do I see any others? There's one at the front here.
Hi, my name is Vijay from HSBC. So what keeps you awake these days, your co-CEO and yourself, in terms of, is it getting the right people for your company or the right customers, or what keeps you awake in your business strategy?
You know, number one is making sure that we keep our customers happy. We run at about a 95% customer satisfaction level, and we're growing rapidly, and we got to maintain the same levels of customer satisfaction even though we're trying to grow rapidly. Second is hiring. It's less so on the development side. We're able to tap into a pool of developers that are on the enterprise side. On the consumer side, there's so many cool consumer companies to go to. On the enterprise side, there are not so many, so it's easier for us to recruit there. And then the third piece is not losing sight of innovation. The reason customers are going with the cloud vendors is because they come out with updates on a regular basis, and hopefully it's innovation that matters to these customers. And the story in enterprise software is fairly straightforward. If you stop innovating, you die. And I think PeopleSoft ended up in a world of hurt, and I had stepped out, David stepped out, because the company had stopped innovating. And so driving innovation in ways that are real and valuable for the customers is probably where I spend the most amount of my time.
When you get to that high valuation, does it make it harder to recruit? People are seeing the value's already there. They're not going to get the big stock option windfalls or restricted stock windfalls.
Not yet, because there's still a decent sized gap between the preferred price and where we can grant options. Once we're a public company, that probably will be an issue. Then people will have to decide, are we the next Salesforce or SAP, or are we more of a mid-sized company?
So how are you going to tie in your staff at that point? You just got to convince them you're still growing.
Yeah,
it
is all about growth, and we've got to take advantage of this massive market opportunity. If the market opportunity wasn't there, I think it'd be more challenging. But the market it's just an enormous market.
No. All right, let's take one more. There's one here.
Hi, good morning. Hen Hardy from SAP. Question about nothing about SuccessFactors. Innovation, can you talk a little bit about how you manage innovation at Workday? Is it top down, bottom up, open?
So I'd say a couple things about innovation. It's ingrained in the culture. We have a group of people that are looking to push the boundaries, and that means that we come up with lots of things that never make it to prime time, but we do a lot of experimentation. The pace of updates, so coming out with a new update every 4 months, it forces you away from big, massive, complex features to things you can actually build in a short amount of time that end up being usable. And then the other piece is we try to learn as much as we can from the consumer internet. I spend very little time, no offense, I don't really watch what SAP and Oracle do. I spend an enormous amount of time watching what Google and Facebook and Amazon do, because they're changing the UI, they're bringing out mobile technologies, they're coming up with new social collaboration around groups, and all of that is going to impact the enterprise. And so I feel like my job and our job is to look at what's happening on the consumer internet and pick and choose what applies to Workday. I think it's part of the interesting time that we live in at this point.
Could you see yourself acquiring any consumer internet companies along the way? I mean, some of these things have incredible traction.
No, they're far more valuable than our company. What we have done is we've recruited very aggressively for consumer internet talent on the UI side. So if you look at our user interface team, many of the people are either right out of college or people from Yahoo or from eBay or from Google that really have great instincts around UI, which is not something enterprises are known for.
Are you hiring out of SAP?
Not really. I mean, I think SAP is is filled with talented people. Most of the core development that would be relevant to us is actually in Germany. So.
All right, let's take one more at the front here.
Good morning, Mark Milankiewicz, Cisco Systems. Just curious, from the standpoint of a migration from a legacy-based environment where you're looking at business process changes, where does Workday sit in terms of a portfolio split between professional services to help these migrations versus a product as a service? And how do you actually orient that from basically margin contribution, and do you have a partner strategy for that?
Yeah. It's a good question. I think one of the reasons why it's probably taken longer for the cloud to get into the large enterprise market, because the SIs don't make nearly as much money on cloud deployments as they did on the legacy deployment. So if you were to look at the typical legacy deployment, it's 5 or 6 times the cost of software is what you spend on implementation. In the case of most cloud implementations, if you take a 3-year deal, cut that in half, and that's what you spend. So it's about a 90% reduction in the implementation costs. And it's because the systems are built to be configured, not customized. Customized is where you get yourself in trouble. So it's much more business analyst work to configure your business processes than it is a huge amount of coding. And so we have a partner strategy. It's about 10% of our revenues going forward. But we now have great partnerships with Accenture and Deloitte and IBM and Towers Watson, and they have come around to the point of view that this is happening anyways, and they need to be at the forefront to keep their customers happy, and frankly, to keep their customers.
All right, with that, I'm going to wrap up and we'll move on to the next one. Aneel, thank you very much.
Thank you very much.
Awesome. Thank you.